What's up, everybody? Happy New Year. This is first stream of 2026. Real glad to be with you guys back again. I'm excited for this year, and I'm going to share a little bit about that. I might even I don't know if I'm going to make changes to my channel, but I'm definitely going to talk about my interests. Basically, the lead is I decided to take some of those numbers on the screen and make them real. And so I bought myself a little homestead farm. And I think that really I wanted to do this for almost 20 years, and I finally decided to pull the trigger this year. And so just bought it, and I'll show you some pictures here in a little bit. That's what this thumbnail came from. I think that actually having like a little small farm is going to do well for my trading, because a lot of times, as you know, over trading is a problem. And so my ideal plan for the year is to start every morning looking at opportunities. I'm going to keep doing the live stream, of course. Maybe even do one from the barn. No, I don't know if I'm going to do that, but we'll get into it. Also, what do I think is going to happen this year? Some interesting perspectives I've been reading. Vibe check. I'm looking at the ES right now, 7,000. I think that we're actually going to continue to have a bullish year. We'll see. We'll take a look at it in just a second. So hang out for people to come in. We'll look at all your symbols too that you got in the chat. Make sure you put them in there. I'm excited for this year. Let's get it started in a minute. Hang on. All right. Well, what's going on? What's up, Blake Marvel? How you doing, man? Uh, Good to see you, man. Um, so yeah, so like I said, guys, I'm really excited about this year. I decided I had some really what happened. Uh, Everything went up last year, and a lot of the tech stuff that I had was overweight in my portfolio. And one of the memes I've heard from a long time is, real crypto wealth is taking it and turning it into a place you can actually grow food. That really goes back to the original, I think, ethos of it, at least in my opinion. But just real quick, I'm not going to try to dox myself right here. You don't see the picture? Oh, I need to let me share my screen. Thank you, thank you, thank you. devices. OBS virtual camera stream. Thank you. There we go. Sometimes this IQ goes up. All right. So yeah, I've been wanting to do this for about 20 years. I've always wanted to have some kind of a distraction through most of the day because you can't just sit in front of charts all day because then you end up doing stuff that's dumb. And yeah, so let's see, where is it? There it is. Hold on. So yeah, I used AI. This is what it right now looks like. This is looking into my backyard. Kind of a silly little infinity pool, but the main I don't care about that. What I really care about is the barn and big ample space there over to the right too that I can actually start growing some stuff this summer. It's an old farmhouse that was apparently built about over 100 years ago. They broke down and they moved it from one site to the next. They must have more money in a sense, like me. Got a nice little creek in the backyard. That's on my property. Pond. It's already stocked with some largemouth bass, and that's where I'm going to be putting the chickens. And so I'm really excited about that. That's what 2026 is going to be about for me. In addition to making sure that I have enough money to buy the things I want for this thing. So that's what we're going to talk about here. So I don't want to bloviate about it, but who knows? Maybe I'll share some of my journeys doing some stuff. It doesn't really apply to finance, except to me it does. I mean, I think this is what it's really all about is being able to. I mean, it's just it really is just numbers on the screen, isn't it? I mean, I kind of joked with this my fiance about this, where I don't like spending money. I hate spending money, and she's like, you need to buy this. You need to get it. It's going to make you happy. But no, like, do you see that number that's on the screen? I like that number on the screen being big. Like that makes me very happy. Like but the number on the screen but no yeah, actually taking something and doing with it, that's actually pretty important. But all right, how to make sure that that number stays big and I can recover what I spent. That's what the goal of this year is going to be. So a lot of things to look at. If you guys got symbols to look at, put them in the chat. We'll take a look at them. I already got a couple from Discord and on a list. I also got a couple of good ideas this week. I'll tell you something. January for me is always sort of it's a weird month. I have some PTSD, I would say, from years and years ago. 2018 specifically. 2018, go back in time a little bit. That January, let's see, is right here. And so this was back when I was trading options a lot more. So this is basically what the month of January looked like for 2018. The year started like so, and the whole month was just straight, not just up and to the right. It didn't even go to the right. It just went straight freaking up. And on the 26th of January or thereabouts, you had this thing called either, well, it depends on how you want to call it, the Holocaust or Volmageddon. And that was where people had been buying this product called XIV. Does it even show up anymore? No, it doesn't because it got delisted. But XIV was a product that let people bet on volatility being low and continuing to be low forever. Basically, it was an entire exercise in recency bias. Because what had happened up to that point with stocks is stock market had just been going on a slow grind up all through basically since 2013 essentially. And volatility was at, yeah, see right here. So this is the VIX. This is the 30-day average volatility of SPY options. And so all through 2017, volatility was basically below 10, single digits. And people just thought, hey, I guess we haven't seen a major volatility event since the 2016 election. We're just never going to see volatility again. And so they crafted products that would let people bet on volatility never, ever going up again. Well, you know what happens when something like that happens. And it exploded from 10, from the 10s all the way up to 50, wrecked that entire product. That product went to basically zero. And the market, well, it had quite a retracement. And I dug myself into a hole that year. In fact, I stayed in a hole for most of the year, but I didn't quit. And right about the fall, October, there were a lot of good setups. I think one in particular was an oil company or something like that. Either way, this little maneuver happened right here on back in October, which allowed for a nice setup somewhere around the month of November. And that was where I was able to kind of set up some puts on some various stocks that were set up correctly. And by that month, I was able to capture that, and I went from a very red year to a very green year. And so that was actually, in particular, that was actually the story for 2025, in particular with a MicroStrategy. Very red all year to finish out the year very strong. And so I don't quit. That's one thing I don't let myself do. I get pissy, but I don't give up on things. But anyway, that's why I'm a little. I'm easing into January like an old man into bathwater. Um, I just straight up vibes. This is a pretty good sign. Made another all-time high on stocks today, in particular on Friday. That week is actually going to. Ah, man, it's just teasing me though, because if there's one thing that I trust that I talk about all the time is false breakouts, and this absolutely qualifies. It's just I love it because it's just so so damn fascinating because it's it's making new highs, but it's refusing to close to confirm those highs. And this is a very, very dangerous thing to be doing at all-time highs. You know, constantly, I want people to understand that what you really want to see is you want to see that what I call it a big green dildo bar. Looks something like that, right? You want it to get a butt. You want everybody to just keep buying. Now, this is just the whole stock market in particular, but um, yeah. So I haven't made a final. Well, I'm not going to make a final decision. I'm going to look for individual opportunities, but I'm not fully YOLO into stocks just yet. Um, but there do seem to be a lot of tailwinds. If you get down here in the weeds, like on the lower time frame charts, especially today, uh, the lizard people, tried to sell it off today, but they couldn't. Right around 10 a.m., I was looking at potentially taking a futures trade. I didn't. Like I said, I'm just kind of easing into things. But basically, they held the volume profile level of the overnight. They spiked it, got everybody thinking that they were going to go down, and then ran it up to a new all-time high. But as the week closes, they can't quite get it up there. Can't quite get it up. So I haven't quite made a decision yet. I haven't actually. The only things that I've done, I closed out a position today in Agilent, which was a good trade from back in July. That was a one of those have to take perfect 50%, 30-minute trades. That The reason I close it out is because of all the things that are in the account right now that I take these. This one, if you look, I mean, it's the least not. It's the least good one. It's the least good one. It's lower highs, lower lows. The best thing, I don't even know what Agilent does, by the way. It's just a symbol. It was just a setup. And I actually prefer it that way because what's really causing me a lot of consternation as we come into this year is Tesla. Tesla, remember what I said about false breakouts. On the weekly, right here at the end of the year, mid-December, and then the final week of December, it could not come up to make a really solid new all-time high. And it's just sitting here taunting me, saying, on one hand, I love the product. But you see that makes me emotional about it. That makes me very invested, not just in it, but it's the rules I would have would say get out because of the fact that failed to make a new high conclusively, but I want to own the stock. I want to own this because I'm bullish on it. But that is not that is such it's just as dangerous as it is useful. But gonna hold it for now. Gonna hold it for now. So anyway, guys, if you guys have got symbols to look at, oh, what's up, Vi? Hey, what's up? All right, so yeah, we got Netflix, QQQ to look at, oil, bunch of stocks to look at. So let me, yeah. So we'll get to those in just a second. So what do I have? Let's just go through all the things. I haven't talked to you guys in 2 weeks. Essentially, I'm not decided on what the market has done yet. We shall see. That's the weekly. Oh wait, this is the yeah. Okay, all right. QQQ again, not really getting up there. You know, one thing, just like last year, I said I was not buying anything AI. I'm really kind of debating if I want to continue to hold Palantir. I don't think I'm going to get rid of Nvidia, but those are not really participating in this rally. Intel doing very, very well, but again, had to wait for that to come about. I mean, I basically got into that really in 2024, the end of 2024, and waited all through 2025 until we got this run up. Let's see. Dollar General, ironically, is close to doubling from picking up in March of last year. Um, Discount retailer, who would have thought? Um, the two things that I looked at that were actually kind of interesting today, um, or this week, sorry, was a Crown Castle. What I do every morning is I look for 30 minutes, like a little particular phenomenon on 30-minute charts. So the spikes, basically false breakouts. And that helps me keep apprised of pretty much all the stuff that's in the S&P 500 and makes it's kind of like a hey, come look at me. And so the two sectors that are the most depressed coming out of 2025 are healthcare and real estate. And so I'm interested in stocks in this area. Of course, we'll look at it in just a second, but UNH, again, great pickup from last year. But yeah, this was one of those setups. And I made the note here. I'm not going to take it because this did not fit my rules. And of course, very glad it did. That would have been just straight up loss. So good call on that one. But this is the kind of stuff that I want to buy. Okay, I don't want to buy any Palanters. I don't want to buy any Nvidias. I want to buy stuff that's dead. I want to buy stuff that no one's thinking about. That's making major lows, multi-year lows. That's always what I want to try to pick up. Just like I did Dollar General last year. Just like Hershey's. Who would have thought to buy chocolate and Dollar General coming into 2025? Who would have thought? I mean, when I tell friends about this, I'm sort of like, they're always asking like, hey, what do you buy? What do you buy? I was like, I don't like to give tips because then I become responsible for people's trades. But I always, whenever I tell people these things, they always want to hear the Palanters, they want to hear the Nvidias, they want to hear everything else like that. And then when I say I'm buying Dollar General, they're like, I hate that. I was like, I know. I told you you're gonna hate this trade. You're gonna hate this, and but that's what works. It's what works. You can't be buying what everybody's saying. All right. So on the crypto scene, let's see. I actually this week I went ahead and took MicroStrategy off my list. I'm not gonna look at it until it hits 131. So essentially, what it's going to continue to do, and I've made a lot of videos. I'm kind of tired of talking about it at this point because I've said all I can to the people I consider friends that are really drinking the Kool-Aid of this scam. Um, it, what I'll just say it one more time. Let's see. And I know there's a lot of people who come to my Discord because they've seen me talk about MicroStrategy. I appreciated the discussions that we've had about it. Um, but once I saw this, I couldn't unsee it. You had the run up, the takeoff, the first sell off, the media attention, the new paradigm, which was infinite money glitch. You know, there's a little saying. New paradigm is basically a saying. Infinite money glitch. This was a this bull trap extended bit of return to normal. This was the darkest moments for that account for me. Um, I just had to basically not look at it and recognize that I had puts and I had a fixed risk on it. It was not fun. I did not like it, but and of course I closed too early. I closed around 200, and yeah. So, but ultimately, there's not going to be much more to be made on the short side, because what happens in these kind of cases is you just have a slow bleed, and then at some point, at a random point, for whatever reason, you're going to get one of these things right here. It's going to look like this, and it's going to return back. That's exactly what's going to happen. I normally don't. I try to hedge a little bit, except in cases like this, because I've seen this time and time again. There's a quintessential example of GME where you have the hype. I've even annotated this for other live streams before. Essentially, you're never gonna beat that first pump. You're gonna have several instances where people think, "Oh, we're back," but no. You're going to have these little interspersed volatility spikes, which are absolutely impossible to trade because you don't know where they're going to top out at. And then they're just going to go right back to the slow death. So, but of course, that's all predicated on perhaps Bitcoin and what it does. Right now, objectively speaking, it is still bullish on the weekly. Hasn't crossed over all the way to what I consider a full bearish trend on the weekly. Still going to wait and see what happens there, but it's not really making any kind of effort to recover. The bullish scenario for this is when price can get back on the bullish side of the Ichimoku cloud. Essentially, you can call it 100. If you can recapture 100 again, then you're going to be potentially in a bullish trend, but not before. And so that's going to be the case for that. And don't really care that much about Ethereum anymore, but you guys know what I care about. And I am such a wuss because finally I had someone contact me just earlier this week. They're like, "Hey, this is a leverage trader. He's constantly taking lots of margin trades and constantly getting blown out in the crypto market." And I asked him, "Dude, what if you just bought Monero? What if you just quit taking all these margin blowouts and just bought this one thing?" It's like, well, I can't get leverage. I can't do margin trading on Monero. Exactly. Exactly. The fact that they don't list it, the fact that they don't have margin trading, it sets it apart from the rest of the crypto market. And like I said, I'm a wuss because I can't bring myself to buy more of something that's already up as much as it is and has been. And so I'm having to do what the Bitcoin people do, is just like do little small DCAs and stuff like that. But every day, every day is this. If you just put these things side by side, any day the Bitcoin's down and the rest of the crypto market is down, Monero's up. It's the only thing it's the only thing that matters in crypto to me at all. It's the only thing that matters. The only thing that actually adheres to the original ethos is the only thing that really is actual online internet money, apart from government censorship and control and corporate interest. There's no corporate Ponzi's around it, and well, had that corporate Ponzi work out for MicroStrategy. It's a buying opportunity, right? No, it's not. Seriously, come on, give it up. That's why I took it off my list. I'm tired of talking about it. It's stupid. It's been stupid for a long time. Anyway, the other thing that I have a lot of friends that are very ecstatic about is, of course, silver. And silver did a naughty thing this week. This is the daily. And it missed making a new all-time high on Tuesday of this week by just pennies. And it's fighting it, but that's not good. Again, at these kind of prices after a run like this, you have to have buying with reckless abandon. I mean, in the run up, where you want to be is you want to be big bars. Maybe you have a little bit of hesitation, but that bar that breaks it is solid. And then bullish, bullish, bullish. This is price stalling out. Now, I'm not calling a top. I'm not going short. But as I've said to people in past streams, just zoom out, bro, and look at what happens with silver since the last 50 years. Uh, it doesn't get to a new all-time high and stay there. Volatility is a double-edged sword. It is a blessing and a curse, and at some point, this thing is going to snap back hard. And actually, I don't think it really matters because I think probably what most people have that I know, the friends I know that I wish all the world of wealth to, they've got a lot of physical silver that they have in their basement and stuff like that. So they're not gonna actually pick that heavy shit up and try to sell it. So I mean, it's more of just kind of a fun thing to enjoy right now, knowing that the shiny metal in your basement is worth a lot. I don't expect anyone's going to go and actually sell any of it, but it is worth noting that you do seem to be topping out on this right here. And of course, it's buddy, it's cousin, which I think actually they've kind of gold is also kind of doing. It's made a new high. It's trying to push up a little bit higher, but it is it's really going to kind of matter, what gold does, what they both do essentially. Silver's clearly more volatile, but gold making new all-time highs is going to be what's going to make silver make all-time highs. I don't think it works vice versa, and so you got to kind of have to watch them both at the same time. And I thought about this kind of in an interesting little thought experiment this week. If I was going to do something with gold and silver, I don't think I would definitely not go in short silver. But what I would look to do is like maybe a pairs trade. Now, what a pairs trade is where you buy one, you long one thing, buy one thing, short or sell the other. And this would have worked out really well. Let's see, gold on the left, gold on the left, and this is on futures, by the way. But let's do. I wouldn't really want to do futures contracts because, first of all, they require such high margin. But let's just say that we wanted to play the game and we wanted to manage our risk. I would do probably a GLD and a SLV pairs trade. Now, depending on how you do it, you can offset the extreme volatility. By what I would do in these cases, I would do it a vertical call spread and a vertical put spread, and that's going to offset a lot of that volatility. Because right now in silver or SLV, the bottom thing down here, this is volatility. A little chart that color codes it for my convenience. Red means high. This is the average for the last year at 30 IV, and you're sitting at twice the average. So essentially, if you buy a call or a put, it's going to be virtually impossible for you to make money because IV is so inflated at this point. So you have to do something to offset that volatility. And so doing a vertical spread where you buy the put and then you sell, you buy a put and then you sell a put. Yes, you buy the put at like say 50 and then you sell the 40. That offsets the volatility and you're still able to kind of capture that price movement. Not saying that's what I'm doing yet, but this is where I'm starting to kind of play. The gears are turning in my head for one to participate in this. Haven't seen a setup yet, but the thing I think would be an interesting way to look at it is which one is more bullish or more bearish. And clearly, if we look back on the weekly chart of gold and silver, back to October of 2025, So from there to there, basically you had that last swing low. Again, these they're cousins. Gold and silver are clearly cousins, and so their cadence matches. They don't exactly mirror each other, but they sort of play. They're playing by the same music, so to speak. And so you had a little wave down, low in October, and then this rally both of them participate in. So this is where it's really good to kind of look at a hedged play, a pairs trade, because you could just pick one, like, buy a lottery ticket on one, or you could understand that there's either way you can make money if they both work out, or a way that's going to manage your risk uh, so that you're not like fully exposed to the price movement. You're not picking a single direction. You're giving yourself a couple of different ways to be successful. And so, if you look back at the price movement from October to January on silver on the right here, that's a 73% move. Wow, that's what everybody's been getting excited about. Gold, on the other hand, only about a 16% move. So much less exciting. Now, why that is, well, gold is, first of all, it has a larger number, larger market cap. Um, but I, I can't tell you why silver's been doing so well. I'm sure people have got these great theories about supply. It's been really interesting to read the every time any asset does a big yeet like this. I always find it fascinating to read the post hoc justifications and the reasons why it has to continue even more. Like, you have something that's gone 10x in a year, and now people have to write an article or a blog, a Twitter post about why it's going to go 10x more. It just necessitates it almost, and I just find it amusing because it never actually works out that way, especially when everybody's talking about it. And so, but how could you have known that silver was going to? How could you have known, quote unquote, that silver was going to outperform gold? Well, if you went back to that moment, just like it is now. Now we know the relative performance: 16% gold, 73%. That's a big spread. And what you would have done is you could have taken a pairs trade where you would have shorted gold by buying a put spread of GLD and gone long silver by buying a call spread on SLV. And so you would have lost money on the put spread of gold, but not as much as you would have made on the call spread of SLV. That's the whole thing. You're going to lose money on one but they both continue trending in the same direction. But if this thing flips around and completely reverses, now you're just not entirely bullish. In other words, if silver were to have gone down, probably would have gone down for the same reason and cadence as gold. And so you would have made money on gold going down, or you could have made money on silver going up. So you've hedged your risk. You've given yourself two ways to be successful in that case. And that's more what I would want to do with this situation, because I know better than just go try to, put myself out there in an ego bet on I'm picking the top. I'm definitely not going to go long at this point. And so that is what I really want to kind of get started at some point. When I see a set, I'm not doing it quite yet, but this is what I'm thinking. But if we go back in time a little bit and sort of, play out, why we could have come to that conclusion. Like, why would we have thought, well, I want a long silver and short gold? Because, most of the attention, media-wise, is on gold most of the time. Most of the time. There's no better advertisement than rising price. But still, again, starting in about August, things all the way back in August in precious metals were just as boring as they have been. Well, gold's been doing pretty good, but silver had been as boring as it had been for literally the last, decade, almost. But August is when things really kicked off. And so when you had that first push in August, from August the 19th up to that high, you had gold up 32%, and you had silver up 45%. Now, it's not that much a difference, but you can sort of see, okay, you could make the assumption that I want to take a precious metal pairs trade. I don't want to be nakedly one directional. I want to try to take a hedged trade in one thing or the other. And so I can see that silver being up 45% versus gold being up 32%. Silver is more bullish at this moment. That's the assumption you can make, and we're just making assumptions. And so when you came to put that trade on, you would say, I'm going to take the long side silver and I'm going to take the short side gold. And that would have been able to let you take advantage of silver. Either, here's the thing, they both went up. Even if they had just gone up a little, you would have, of course, not made as much. You would have lost money on the put side, but you still would have made money on the call side. But of course, the relative outperformance would have really helped you out. And that's where how you could have benefited from the big outperformance on silver is if you had taken just a naked call on silver, whereas you had also taken a naked put on gold. So you would have the put would have expired worthless on gold, but you would have had all the benefit of the call going up, and you would have been able to hedge in case silver were to have gone down. Gold probably would have gone down too, and you would have been able to make money if it had gone against you. So that's what I'm looking at in precious metals right now. And so we'll see. I haven't made a decision on that yet. But I wanted to get that's. Don't want to put too much time into it today. Maybe we'll look at it tomorrow. But here's some food for thought and some homework for you to think about. Think about some other things, because I did a little bit of I posted the research when this came to me on Discord. But think about some other things like UPS and FedEx. Two very, very similar companies. They're affected by the same market forces, but they are independent companies. And so if we were to go side by side and we were to look at on a weekly, this is FedEx on the right. And by the way, one thing I talked about on the Discord that I forgot to mention, you'll notice I have Ichimoku on this. And I used to use Ichimoku for just about everything. Now I use it for some specific things. Number one, like I was talking about Bitcoin earlier, when I'm really discerning is something in a bull trend or a bear trend. That's what I'll use it for. But also, it makes it really easy, or visually easy, to look at two separate instruments side by side and tell what their relative strength is to one another. Let me go back and use gold as the example. So gold on the left, silver on the right. If we go and look at probably better if we do like a 4 hour. Let's do a 2 hour. Let's do a swing and time frame, and let's see. So 4 hour, 4 hour. Oh, I'll tell you what, I'm going to use actual futures because stocks are going to have those gaps. Futures a little more consistent. Okay, so let's do a daily chart of this and this. So notice I want to use the cloud. Hold on. Okay, so when I was doing this I was talking about this on Discord. This was earlier this week, where you basically had, I was looking very closely to see what was going to happen with silver when it was making this second run at the high. And at that same moment in gold, you had a similar pattern. So you had a pullback into the cloud, which sort of gives you that visual representation of where price is relative to the past. And then you had it here on silver. Now, obviously, by getting on the bearish side of the cloud, this didn't actually trigger a bearish trend, but it's way over on the far lower bearish side of the cloud. Gold on the left here was more bearish, whereas silver, it relative to its past price, was able to hold the cloud and not get on the bearish side of it. And so what ended up happening is you have an attempt to make the high, on Tuesday of this week. Gold got nowhere near the high, whereas the more bullish one got all the way up to do a full retest. So little subtle differences like that can help you decide, as well as percentage movements, which one is more bullish and more bearish. All right, so UPS and FedEx are the two that are probably, you know, you can do Coke or Pepsi, you can do Home Depots or Lowe's, things like that. And I want to kind of revisit that strategy. I haven't really put anything together quite yet, but because most of the time I just want to be right. Like most people, I want to, I need to get away from that. I need to get away from the whole ego thing, but I like to just be correct. But there's something to be said about taking non-directional hedge trades as well. It can work for some people and their personality. All right, so UPS. So this is the daily of FedEx, and this is the daily. Let's use a weekly. Let's just use a week. So weekly of UPS. Now I'm thinking about. This is when I get interested in things. You know, when things have been going down since basically for 3 years straight. When a company's been going down for 3 years straight, that's when I start to get interested in it. But if you just compare it to its competitor, uh, FedEx has not had nearly as bad of a run as UPS has. In fact, at this point, it's pretty clear that FedEx is already on the bullish side. It's already in a bullish trend. Whereas FedEx is fighting to, excuse me, UPS on the left is already fighting to try to get on that side of the cloud. So objectively, or according to Ichimoku, UPS is more bearish than FedEx. And so if one were to begin a pairs trade in this year, let's just say that you took a pairs trade. Now, this was something I thought about doing. I may actually do it. If you were basically to take, let's say a leap, an option for FedEx all the way out to next January, and you were to do the same thing on UPS, you would take a put on UPS, betting on it to continue going down. Now, if the market for parcel carriers does very well this year, you're going to make money on the FedEx. If it doesn't do too well, you will make the money on the UPS if they both go down. And that's the general idea of it. And I did a little bit of spot back testing this week on Discord that I'm getting a little bit into the live stream here. I've got to go cook a brisket for some friends. So we're gonna get to all your symbols here in just a second. Go through the ones that people asked this week to go through. So if you would put them in the chat, we're gonna look at them in just a second. But yeah, so hop on Discord and go to the everything chat, and you can see where I posted that. And if you have questions, I love talking about this stuff. So yeah, but one thing I kind of want to articulate or share is just like what I was talking about at the beginning of the stream. I haven't really made a bullish bias yet on the market. Okay, and I don't know if I shared this in a past live stream or not, but let's see. Howard Marks is one of those goats of investing, and I saw this little quick interview of his. Yeah, here it is, which gave me chills. So I'm not going to play the thing, but here's the gist of it. The 10-year returns of the S&P 500 when you buy it with a 23 PE ratio or higher, price to earnings ratio. Now, I don't use price to earnings ratios. I don't think anybody does anymore. They haven't used this since the 80s. When you have companies, falling with 100, or excuse me, I stopped looking at PE ratios when I saw Ford back in, I think 2020 had a negative PE ratio, and they shot up like 25% in a day. So PE ratios don't matter, but statistics, I like statistics, and 10-year returns of the S&P 500 when you buy it at a 23 PE ratio or higher. Right now, or this was from the last week of December. No, so I didn't do a live stream about this. This is important. This is really important. And this is what has colored my thinking going into this year. Really, it has. Uh, every case, in every case, if you bought the S&P 500 when the P/E ratio was 23 or higher, and right now, new all-time high, it's probably 25 or 26. The 10-year return from that point was between -2 and +2, essentially zero. So, what I take from that thematically is if you buy the stock market now, in 10 years, you will have made no money. That gives me pause. Now, in 5 years, it could be up 20% or 30%. In 2 years, it could be down 30 or 40%. Anything can happen. But this keeps me from really wanting to take any new big positions coming into this year. And so that's why this live stream was about pairs trades. That was by design, because at this point, going into 2026, I want to make money, like anyone and everyone does, but I want to also do it and I think it's the smartest way possible, as I always do. And so my thought process going into 2026 is about hedging. It's about taking plays that may have a directional bias if they are really, really, really unique. If there's like some really good alpha there, in other words, like I said earlier, looking for companies or any assets for that matter. I mean, I kind of slept on silver because I just didn't care. So I don't regret it. It's just I just don't care about precious metals, and so I missed the whole thing. But there was money to be made, so I got to be mad at myself a little bit for being lazy. But what I want to do is I want to make sure that I'm looking for the best opportunities in the most depressed things so that in the event that we have a good bullish year, they can be lifted, but they also can be operating somewhat independently. So I want to be very specific. I haven't taken any new positions in this first week of the year. I've only sold. I've only closed out, like I said, the kind of the weaklings, the weak position I took last July in Agilent. I only closed that out this week, and I've really considered getting rid of Palantir and buying a tractor with it. That's actually what I'd like to do. I actually like to take these shares and turn them into an F-150 and a tractor for the farm. Haven't done that yet, but that's on my mind. So, all right, let's look at your symbols and let's get into having a good weekend for everybody. All right, so first of all, let me go back through. No second best wanted me to look at well, first of all, oil. Um, I've been saying this for a couple weeks now that the fact what you have to understand is that oil futures, oil prices in general are, I feel like I'm saying oil weird, are forward looking into how much energy the economy is going to need. And so whenever you have a lot of bullishness, in other words, like back in 2022, right before we had the big fall off in equity prices, or back when we had 2008, 2008, I remember going to the lines at the gas station for $5 a gallon, and everyone thought the economy was just booming, and then of course you had a bust. But it's all sort of forward looking to what people are thinking that the economy, how much oil, how are they going to need, how much energy are they going to need to transport goods and services, and it has been trending objectively bearish. And so the oil market generally tells us economic slowdown. That's what it sort of implies. That being said, the irony is cheap oil prices are what fuels economies. And not going into any of the politics of recent events, but we'll have to see how this Venezuela oil thing pans out. I don't think it's going to affect very much in the immediate term, but it could have some interesting interplay with the market. But bottom line, oil has positioned itself for not that much economic activity going forward. That's what I'll say about it. It is not going up. In other words, oil is not pricing in increased economic activity in the near future. So that's what the oil market is telling me right now. And I'm of course removed from the oil market because I have an electric vehicle. So uh, I don't really. I mean, I care about it from the economic sense, but I don't have to worry about gas prices anymore. So, all right, that's oil. Someone asked me to look at that. All right, CAG, ConAgra. Um, see, this no second best. He's a good guy. He's a good guy. He knows what I'm looking for. So if you'll notice, I don't know if it's because we talked about this or if I was just going through doing a spot check. You'll notice I already have a alert set at 1521. This is the kind of stuff that I'll look for. ConAgra. Who cares? Who cares about cereal? How are you going to get rich making any money off of uh, Kellogg's? I don't know if they're Kellogg's or not. How are you going to make any money off oatmeal? Again, these are the things that I like to buy. I like to find companies that no one on Twitter is talking about. I'm talking about penny stocks. I'm talking about blue chip, big ass $1 billion companies that like my favorite companies are of course things like Costco, which has been going up and to the right for many many years. Eli Lilly had some interesting things happen in Eli Lilly this week. It is almost looking like a false breakout, but again, Eli Lilly's just been printing money for the last couple of decades. Rollins, another one of my favorite. What is Rollins? It's a company that I used to work for here in Atlanta, and they own Orkin. Up and to the right for the many years that I've owned it, like almost 2 decades now that I've owned, 15 years probably. Just who? I mean, is it doubling every year? No. Is it doubling every 5 years? No. But steady appreciation on companies like this, and of course, my all-time favorite, Waste Management. When people ask me, would you buy garbage if it was going up? I say yes. I had a great opportunity in October or this year to pick it up on a 50% at 196. Just I only want to buy winners. Okay. Now, of course, this doesn't look like a winner, ConAgra, but these are, in my mind, when I see this, I think this. That's what I want to capture. Just like on Dollar General last year, where again you had a 3-year bearish cycle, picked it up in March of last year, and you've almost doubled since March of last year on a discount dollar store. So I like where you're at. No second best. I know you're going to watch this later. I'm looking for that final volume profile level at 1521. This is what I call the last possible level, because after that you basically go into oblivion. It's hard to find a level down here, but let's see if something sets up at around 1521. All right. So next up, Campbell's. I've heard something about Campbell's. Are they getting sued for like making people sick or something? I think that might have been what I heard in passing. Again, you're showing me what I like. You're showing me dead stuff. I would say we could start potentially looking here. We could, because there at 2659 is a very whoa. I'm having to go back all the way to the 90s for this. I don't know. So that's the thing. I don't like. I'm just do volume profile levels from the 90s work? I don't know. But it's actually more from the 20 years ago. And it's from these lows back here in 2008. So you're basically back down to the 2008 lows. And so we'll see if it could possibly find a bottom and hold it. I like it. Let's put this on our watch list. Contrarian to a fault. OKLO. Why does this seem familiar? I think probably because I've already charted off. This is in the value of risk. It popped above it here, but you've got, of course, the big trend which started in April of last year, topped out in October, and yeah, I'm not interested in this because yeah, it should have gone is in effect. You should have caught it here, and you should have gone up and retested. This is a dangerous thing to get into. In fact, it has gotten back above the 105, but not what I'm looking for. So knowing that. All right, let's look at the rest of these. Get them in. Get them in. Get them in. Netflix. I have zero interest in Netflix. I really do. I have zero interest. I look. I don't know. I don't. I don't. I try not to be too judgmental about people and their beliefs and their opinions, but you guys had The Witcher and you fucking ruined it. So I don't want any Netflix. Good luck. Good luck with that. I hope it goes to zero. QQQ. I think we talked about that. Yeah. So you got to get it. You got to get a big bullish green dildo bar close above it. I again, just what I said a few minutes ago, I'm being very cautious going into this year. I think there's a lot of bullish tailwinds, but we're just so far along in this bull cycle that I mean, you're at the point just like with silver, you can't win buying it. And just like I said with the whole PE ratio statistics, about 9 out of 10 times you're going to be zero. You're going to have basically 0% return over the next 10 years if you buy the stock market here. I'm being very cautious. I'm not calling it bullish or bearish yet. So, all right. QQQ. That's like, I usually use SPY, but QQQ is going to be more. It's Nasdaq, so it's more tech focused. And all your big favorites. Palantir, Nvidia, Apple. All the fan favorites. Apple's interesting. Apple has actually. Oh, this is on the weekly. Interesting. I'm glad I thought to look at this. So Apple has broken its last all-time high. It broke it back in October, and now it has actually come back to retest it. Huh. That is a good solid break and a retest of a level. So I say one thing, I'm not bullish, but then I see an opportunity. Not taking it, but I'm going to keep a look at it. What I want to do when I talk about looking for opportunity is, and again, this actually opened below it and came back up to retest it. Notice how it came down to it on Wednesday. It knows where the price knows where the levels are. It's kind of like a self-fulfilling prophecy of, price action. Like people know where that last all-time high was. And so they ran it down on Wednesday, and then Thursday they opened it much, much lower. And they came back, and then here at the end of Friday, they're like, I don't want to buy it back above that level again. This kind of stuff, I think, is really cool to look at. So it's actually not fully doing a thing. But if you can get it back above here, then that's where you start to maybe look at taking a position in here. I want to start small on the lower time frames with a setup that I can have confidence in. More importantly, that I can put a stop under. And then once I'm into the stock, I'm just going to hold on to it forever, or until I get tired of owning it, or I want to buy a tractor or a F-150. So, or some chickens actually. I think I'm going to get some. What is it? Lavender. These are the chickens, by the way, that my fiance really wants. And actually, my homestead friends tell me that these are lavender or Orpingtons are some of the most friendly, nicest. You can pick them and pet them, and they lay a lot of eggs. Unfortunately, we're gonna have a no-kill farm. I think she doesn't want to. She loves to eat chicken at Chick-fil-A, but she doesn't want to partake in the actual making of the chicken. So that might be a little one of those. I'm going to respect it, but we'll have to have, she and I as a couple will have to have a little talk about how much no killing will go on. So, all right. Let's see. Okay, so looks like I covered our Walt. Let's look at yours. Intel looking good. Intel, like I said, this is one of those. If I had to give you an elevator pitch of my strategy, I want to buy things that people think are dead, and I want to own them as long as I can. Or excuse me, I want to buy them when people think they're dead, have them go up with very little risk and then own them for a long time. So I've had Intel for since August, but yeah, basically around here. Yeah, so it's around the late part of. I'll tell you exactly what made me buy it. So yeah, okay, never mind. Right here. So I picked up Intel back around here because it had this big, scary, oh my God, they're going out of business or some whatever the BS was. They got it down here. And then October of 2024, it pulled back to a short-term 50%. They were about 21. I remember that's the number. So about 21.58, somewhere in that range. I think it was like 21.60. And I've owned it at 21.60 since October of 2024. And so whatever it does now is just yay. Okay. Obviously had this sit in it for a long time. But, this is also the same thing that, like I was talking about Palantir. Like I've owned Palantir from $9. It's at, 177. Yay me, right? No, because the $9 I bought it at was about right here. Same kind of setup, big long thing comes down and makes a short term 50%. But since I was small enough, I held it all. I just didn't look at it. Came all the way down to 6, and now I have a little bit, not that many, up around here. So enough to buy a truck and a tractor. So we'll see about that. But yeah, that's what. So go back to your thing about Intel. Yes, breakout. Yes, I love it. I'm already in it. I can't tell you how to get into it now because that's not what I do, but it's what I want. This is what I try to envision when I get something. Whenever I buy something that looks like this, I mean this looks bad. It looks bad, and it stayed bad for quite a while. I'm always imagining it doing this, and so yes, that is a breakout. We'll see what happens. I'm not going to sell the Intel. All right, let's see. MOH. I like healthcare. Don't threaten me with a good time. Ooh, okay. So again, I like something that is very down. And what I would do in this case is the same kind of setup. I would look at it maybe to pull down to 160. Now, in the past, okay, we've got some price action to look at. Is there a period from the 2020 era that we can look at that is a good volume profile? Oh, that is a thing of beauty. Boom. So I haven't talked about it very specifically in this live stream, but my regular viewers know that one of the things that the reason I keep drawing this volume profile, what it does is it takes the selection of price. I usually use a price era, place and time where there was either like a trend or a consolidation or it's the most relevant price area. And I go to say, okay, where was most of the trading done at what price? And it does this little histogram right here that shows you where most of the trading happened. So, of course, it's pretty easy to see why it did that because in this little consolidation from 2018 to 2020, there's a lot of back and forth, but it kind of meandered around a certain middle price, which was 134.96. And I call this the cheat code. Nothing is ever 100%, but time after time, when someone like yourself comes in and says, hey, look at this, and I go back and I draw the volume profile, because again, Dollar General and Hershey's are two examples of this principle entirely, where you look for it to come down. This was a volume profile level from 2014 all the way to 2017 on Dollar General, where you had this massive 3-year sell-off that comes down to its multi-decadal volume profile level, holds it, and then rockets up. And so I have been constantly searching for these. And you have discovered one. Yeah, I'm sure it is probably trying to break through on the daily. That's good. But what I'm fascinating and, spurging out or not, I'm fanboying about is this hold of that volume profile level. Do you see that right there? So where people traded this, the people think about it this way, narratively speaking, the people that bought this back in 2020 are sitting there and it's coming back to that level and they defend it. If that's what you want to say it, narratives are fun, but they don't really make any money. But these levels really do very often. And so I would have loved to have grabbed this down here back in November at that level. That level that was made all the way back in 2020 or prior to 2020 actually. It launched from 2020. So you're basically back at the level it was in 2020. And it's I don't know why they went down that much, but this is a good find. Healthcare. Last year I talked a lot about this thesis. Um, it's pretty simple. Uh, the the people that have all the money, not the billionaires. I mean, they have a lot, but yeah, they do have the money. But the people that have all the money are the boomers, the baby boomers. They are getting old, and what people do, old or poor, is want to continue being alive. And how you do that is by taking care of your health, which unfortunately in America costs a lot of money. But rather than be mad about that and, just robble, why don't you find things that people are going to take all that generational wealth and spend it on over the next 10 to 15, 20 years, keeping themselves alive? And so the only things I'm not interested in AI, I'm not interested in tech. The long-term things that I'm interested in right now is healthcare. Now, finding the right company to do that, it's hard to say. I'm not a person that goes and digs into fundamentals because ultimately you're still making a speculation about like what products. But this is a good example of where in last year I really wish I would have found this last year. I would have just thrown money at it in November. I guarantee you because of like the level and the sector that it's in. What's it up from here? Oh, how's it going? 36%. Yeah, I mean, I would have absolutely just thrown money at this. Just taken a big chunk and just thrown it at it. And if it went down some more and I needed to stop out, I would. But I would have absolutely just thrown money. I mean, I could now, but I mean, I shouldn't think that I've missed it. But I'm just. This is good. This is good. By the way, thank you all. This is why I do these live streams. By the way, opportunity is duration. It's for you. Selfishly, it's for me. But this is very good. I like this a lot because this fits my long-term narrative thesis. I mean, I'm not even looking at what this company does. I mean, they could be Molina Healthcare and they could be a marketing company for healthcare for all I know. I go with price action before everything else, but you can see how even just from that one particular level that was created back 5 years ago, you already have a 30% move off of it. Now, who knows what could happen? But therein, it could go down, but it could also go back up and recapture 400. So again, I'm always thinking what could happen, and I want to get in when nobody thinks that is going to happen, and that's usually when you have a chart that looks like this. And so I'm going to watch this very closely. I want to see if we could get maybe a pullback to 160, basically at 50% of this retracement. We could get a big nasty pullback on the stock market, and this is going to be something that definitely needs to be alerted on. So we're going to go ahead and we're going to set alerts, and we're going to say um, thanks, walled in chat in live stream chat 1-9. By the way, another thing I did to start out the year, I went through and I cleaned out all my old uh, alerts that I don't use anymore on TradingView, and so every day I'm going to be checking my alerts. I don't need. I need. Okay, okay. Take that back. I don't care about Litecoin versus Bitcoin anymore, so I need to clear that one out. But the rest of them, I need to go back and clear out. There's a lot of them, so I didn't get all of them. All right, Target. I don't like Target as much. And you see, I've already got marked off 76 and 71. It has pulled back to, I think it's actually at a resistance right now. because I've got this level marked off because this is actually another interim volume profile level from 2019 to 2020, and it's already held it as support once. It lost it, fought at it, it got to it again, and here it is. This is a short. This is actually a short opportunity to me on target. I would not want to long it down until it gets down into the low 70s, but this is a pretty clear level that it's come back up to. It's not a 50%, but this is I I don't I don't really short stocks very often because, as you know, stocks only go up. But if I was going to short a stock, Target would be a short. I don't see a particular setup in here that I like, but if, for instance, on my 30-minute scans, if this thing came up with a spike around this level, like a false breakout that I could put size some risk around it, I would definitely throw a put on Target. Yeah, that's bearish, or at least it's worth a short. It's in a downtrend. It's a clear level. It's already hit it once, and it failed to break it this week. Um, that's all I need to basically say. Like, hey, worth putting some short money on. But I don't short stocks that much because they only go up, except when they don't. All right, Whirlpool. Whirlpool. I don't know. Like, I like the dividend yield on Whirlpool, but I actually had Whirlpool last year and I cut it. Okay, because another friend of mine, who I think I met through, I don't know if I've met through video games or the Discord here, but it's at a level 75.36. It's still, they cut their dividends last year, and that hurt them a little bit. It's hanging out at this level. I'm not mad at you if you buy Whirlpool as a dividend play. Part of the reason I got into Whirlpool was because this was around that whole tariff. You remember the whole tariff era where, the economy was going to be wrecked. The world economy was going to be wrecked by tariffs. So I went and looked, okay, what companies are going to be better positioned to not be affected by tariffs? And Whirlpool, in my research, I found had done more to onshore to the United States a lot of their manufacturing as opposed to other companies, other competitors like Samsung and things like that. But I wasn't liking what it was doing here at the end of the year, and so I went ahead and took that as a little small loss to just get out of it because it just wasn't performing. It wasn't running away from this level. Not mad at you though if you buy it, but I think I'm going to pass on Whirlpool. But I did own it last year, and it just wasn't doing. It just wasn't running away from that level like I wanted to see it do it. So I got rid of it. Yeah. Let's see. FISV. Oof. That is scary. I have it. I have a whole marking from probably like the teens. That is. What did they do? Because clearly they screwed something up. Jeez. I don't know, man. Like I on one hand I say I want to buy scary stuff, but these people must be going like the CEO must have like banged all the secretaries, um or they're getting sued to oblivion or something. Jeez. What did they do? I don't know. That is not an organic. Like, I've been doing this long enough to kind of like, yeah. I mean, you've seen the ones I like, and the one like this is one I don't like. This is something bad. I can just look at the price and I can say, people don't think this company is going to be around in 5 years, and that is sometimes a good thing to bet on, but I just good luck. I mean, it's kind of again, I wouldn't be mad at you if you wanted to say like, no, I'm going to be a contrarian. I would respect the hell out of you for being a contrarian and buying this, but I can't do anything with this. Yeah, okay. Well, I mean, good luck. I mean, it could work out really well, but that is not an organic like sell off. That is something bad has happened to that company. Yeah, Netflix. Sorry, I think I already answered that. Yeah, you got my answer on that. Yeah, we're not doing Netflix. TTD trade desk. I've got this marked off. It already came down to the first level at 45.98. It didn't hold it again. These are the things I kind of would like to. But here's the thing: if I had bought this at 45.98 at that volume profile level right there, because you can see how it's, it should be okay. We're at major lows going back several years. We should have held it, and now we're breaking free to the bottom side. I would have stopped out of this one. This would be one of those where I would have gotten into it based on, hey, a contrarian. I'm trying to buy a company that's like really low down there. But this is where your risk controls kick in. You're like, okay, this trade isn't working. I'm getting out of it. It's not turning around. The next level would be, we got to go back and let's do it. Let's do it kind of the more yeah. Let's just do this little arrow right here. It'd be really, really dead, but I would say it would either be 28 or 20. But it's kind of in free fall right now. It should have really kind of held this 45 range. No, that's again. There's some things I just like intuitively, and that it's just like it's not stopping. It's going to keep finding levels, and you really don't know which one. It's not very clear. Not very clear. All right, so yeah, okay, all right. That's all the ones. Oh, AMD, AMD. I think AMD is doing quite well actually, if I recall correctly. I have a good friend of mine that's big into that. I don't own it myself. Yeah, so they have been doing pretty well. Um, why do I have two? Oh, this is because I was doing some testing with, trying to pick a target for my friend. I don't like what it just did here. I don't like that you had a sell off here at towards the end of the year. This is the weekly, by the way, where it comes down and you have what I look for either if I'm going to for a reversal is you have of course your major high, your low, and then you have this first impulse, this sell off or this first wave of buying, and then what you have to do is you have to see, okay, well, let's draw a 50% at that level, because what did half the people that participated in that move do when it got to that critical point? Um, and so when they got to the 230 level, rather than bust it and come up and that's not a very good arrow I can draw in here. Rather than come up and break that high, instead that's a good solid hold of that 230. I'm not saying that the trend is over yet. Don't think it's a buying opportunity for me. Yeah. So, I mean, it could hold here. It's just this is not a level that I buy it. If I was going to potentially look to buy this, I can already kind of tell by looking at it. I would want a little bit more of a deeper cut, a little more of a deeper pullback, somewhere into the 171 range, 171 to 160 range. That would be the kind of thing I'd want to see in this particular thing. What about for here? What we got for volume profile? Yeah, yeah, yeah. So basically, where you'd find support is basically in this 170 to 160 range. That's where I'd like to. And honestly, like just kind of playing things out in my head, and what my gut tells me from just looking at this hold right here is that it wants to come down and try to find that, and that's when you might see that come up like there. So 50%, 50%, 50%. It goes up, it comes up, sells off to 50%, then pulls back to the wider 50%. That's what I look at there for that AMD. All right, or AMN. Sorry, one more. AMN Healthcare. Love Healthcare. I think I already have this marked off from a couple of weeks ago, maybe November. I did not take this, or oh, you know what? Maybe I mean I drew off the trade for someone. Maybe oh Jeremiah. Oh, I bet I did this for you. I think oh we were talking about this as a breakout. That's right. Okay, so this was an Ichimoku breakout, and oof. Yeah, yeah, that's not good, is it? I mean, 1489 is that last volume profile level. It really wants to touch it again, doesn't it? Here's the thing. There's still a chance. What I'm saying is there's a chance that you can come down here, maybe play around a little bit, but yeah, it's, that sucks. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489. 1489 That sucks. Yeah, that's not doing too well, is it? Hey, but like I said, healthcare is still very depressed, and I mean, the irony is, I really believe that at some point, there's going to be selection bias, of course, like with all things. You're going to go back in time and you're going to see, oh, wow, if I would have bought this healthcare stock in 2025, or if I would have bought this healthcare stock in 2026, look, it was a bottom, woo. But of course, that's going to be the ones that you look at that actually did succeed. But that's where, I mean, any and all great trades and starts are going to come from something that looks like this. But yeah, we've already evaluated this, and it should have already kind of held it once, and it shouldn't be coming back. I don't know what to tell you. So maybe give it a little more, but don't let it go past 14.89 too much, Jeremiah. So, all right, guys, I gotta go. I gotta go cook a cow. So, been good to talk to you guys. Hope you have a great year. I'll be back next week. We'll talk about stuff. Hop on the Discord and keep coming up with those opportunities. And I'll let you know what I find. So, Troy Wisely. See you guys later.